Indian digital payments provider Paytm got off to a shaky start with its debut on the Bombay Stock Exchange. Shares finished the first day of trading down 27% as investors worried about the company's ability to earn profits. Despite these jitters, it's the country's biggest stock market listing ever, and the cash it's amassed could help Paytm expand into a global payments provider. Mobin Nasir reports.
What do these street vendors in New Delhi have in common with billionaires Warren Buffett and Jack Ma? They're all betting on the success of digital payments app Paytm. For millions of small business owners, it's a convenient alternative to handling cash.
Sometimes people hand us large denomination notes and giving them back change is a problem. This app solves that problem.
The ease of use has attracted 450 million people to the app. It's accepted by more than 21 million merchants across India, and more than 5 million transactions are carried out through Paytm every day. Its rapid success has attracted the likes of Buffett's Berkshire Hathaway and Mars Ant Group. They own 23% and 16% of the stock respectively. That's encouraged others to back the digital payments app, leading to a $20 billion valuation in the initial public offering.
I think the Paytm's IPO becoming the largest IPO is a surprise. So it was totally surreal and unexpected.
But some analysts and investors are balking at the record stock listing. Paytm lost hundreds of millions of dollars last year, and as competition beefs up, they say the company has no clear path to turning a profit.
We can say that the IPO is a pricey, and since it's a very big, a large amount is involved there, and there's not so much of frenzy like what we have seen in so many digital companies and so many startups.
These fears took a toll on the stock in its first day of trade. It fell 27%, dragging the company's value down by more than $4 billion. Despite this setback, Paytm has accrued a hefty cash holding, and it's now hoping to use the money to take its operations global. Mobin Nasir, TRT World.
And Radhika Bajaj spoke to Paytm President and Chief Financial Officer Madhur Deora after the company's listing. Here's the interview.
Your company has raised a large amount of cash. Where do you intend to use it?
We are going to invest a chunk of this money into growing our payments network, which is really about growing consumers and making their experience better, growing merchants and giving them more technology, and overall spending money on our payments technology platforms so that it can handle more scale, it can handle more innovation, and so on. We're going to spend a chunk of money in new business initiatives, such as, and those could be organic, and those could also be inorganic. So we're going to spend a chunk of money in that. And then the rest of it, we have to sort of get ourselves some flexibility with respect to what the environment would be.
There are concerns that there is no clear path to profitability. How do you plan to keep the investors happy in that case?
I don't think I see that as much as a challenge to profitability. It's what stage of the journey you're in. Most companies, especially most internet companies and technology companies, they're unprofitable before they're profitable, and hopefully at some point they become massively profitable. So that's the journey, and that's the stage of journey we are in. As I said, until a couple of years ago, we were in this very heavy investment phase. A couple of years ago, we started to get into a more efficient investment phase, and I'm sure over time we'll continue to do well.
Now, there are many digital payment providers now as opposed to, say, 10 years ago. Some are backed by the government. How will Paytm maintain its unique proposition?
I think we differentiate ourselves by being a comprehensive payment solution for consumers and merchants. So our experience is that consumers don't want to use one payment instrument. And philosophically, the way we think about this is if we choose to do one thing, then we are trying to design the user experience around the thing that we have chosen to do. If we say that let the users decide what is the best experience for them, and we just have to find a way to provide that, then that's a better business model long term. So that's why we provide a comprehensive set of payment solutions to consumers and merchants. Obviously, consumers to be able to make payments and merchants to be able to accept them. And that's really the differentiator, right? So our business model, we think, is much higher retention, much higher stickiness, much higher monetization.
Your user base grew quite exponentially, especially after demonetization. How do you plan to continue with that pace of growth?
We're seeing very good growth. We're seeing 120 million annual active users, slightly more than that right now. And that is a very significant subset of all people who use smartphones in the country actively to do any kind of transaction. So we believe on the user count and user engagement in particular, right? It's not enough to have one user who comes and does one transaction a year. There's less that you can do with that. But if a user comes and really makes it a habit and starts doing 10, 15, 20 transactions a month, then those are the sorts of users that you can really engage with and show them more services, including financial services, commerce services, and so on. So the advantage on payments is that it allows you to do that because you make so many payments transactions in a day, a week, a month, that it allows a company like us to have that kind of relationship with our users. So I think one of the things that we track is how many users we have, but also how often they're transacting with us.
Thank you very much for joining us.
Thank you for your time.
And that's all from business for now.